We're live. Hi, everyone. I'm delighted to join you today for the ESG and Innovation FinTech session of the Adeva Roundtable, Adeva Conference. And without further ado, I'm going to ask every one of my distinguished Roundtable panelists to introduce himself briefly. And first, we're moving to the city of Montreal in the Belle Province of Quebec. Jan Christopher, tell us more about who you are and what you do.
Hi, great to be here. Thanks for the intro. My name's Jan Arp, founding managing partner of the Holt Exchange. We are a global investment firm seeking the top investments that fit within our ecosystem. Our ecosystem comprises of 500 advisors. Those are either financial institutions, investors, experts. In fact, one of our advisors is joining me on the panel here today with Svetla, so great to be on a panel with her, as well as others, of course. In doing so, we actually seek the top companies, the 10,000 globally at the pre-seed seed level, everything before Series A that is a fit. And every year we do about 9 investments through this process. We use a data science approach to do this matchmaking. So now we've made upwards of 35 investments and are very excited about our next portfolio of 8 companies that we've just invested in. We'll be showcasing at our upcoming FinTech show, November 16th.
Great, and now let's move over across Lake Champlain to New York, and more precisely to Wall Street. And now we're moving to Svetla Marinova, who's in charge of FinTech partnerships for Amazon Web Services. Tell us more about what you do, Svetla.
Sure, thanks for the intro, Nick. And it's actually really funny that all of us have met previously. So this is not the first time that we're speaking together on a panel. I distinctly remember meeting Nick in Cairo a few years ago for a really great conference that we did there. So just to tell you a little bit about myself, I work at AWS and I work with FinTech and ESG partners. And the way in which we work with partners is we handpick solutions that are built using our technology. And we help those partners by co-investing in the development of new products and services that they create in order to help our clients and using our technology. And we also help them with go-to-market in terms of co-marketing and co-selling their solutions. So ultimately, the goal here is to help our mutual customers in the financial services space by handpicking the latest and greatest solutions utilizing our technology.
Great, and now let's move to the other side of the Pacific Ocean, to the city-state of Singapore, and we're delighted to have Dr. Khoo amongst us, who's not only a FinTech and ESG expert, but he's also the former head of risk management at 2 of the largest Canadian and Asian sovereign wealth funds / public pensions. Tell us more about what you do, Dr. Khoo.
Oh, thank you, Nico. Bonjour. Good day to all of you. Thank you for the invitation to speak on this panel. Basically, I'm a part-time lecturer at the Singapore Management University, but at the same time, I'm on the advisory board of some FinTech and AI companies, primarily specializing in blockchain as well as machine learning. So what I do is to actually specialize in developing data models for them, because I started doing data mining back in the 80s in the last century, and then suggest how to ensure the governance. So both in the pension and sovereign funds I work for, I specialize in GRC, governance, risk, and compliance. And in today's world, if you reimagine FinTech, we also have to talk about the advanced data analytics, so that when you relate it to green or ESG financing, a lot of alternative data will be involved, and we really have to harness and use the potential of the analytics to analyze them, to measure them, and also to verify or to measure them, to manage the kind of carbon footprint and things like that.
Great, and I should add that Dr. Khoo is also the co-founding advisory board member of the Singapore Economic Forum, of which I'm a director, so I will use that as a transition. So my name is Nick Firzli, and I'm based in Paris, France. And apart from being the director of the Singapore Economic Forum, my main role is to be the Director General of the World Pensions Council, WPC, which is an EU-based think tank and asset owners association. And so we focus on two activities mainly, which are research and advocacy on behalf of, pension investors and pension board members. And of course, ESG and FinTech have been really at the center, as Svetla well knows, at the center of our activities in the past 2-3 years. So I'm delighted to have you guys with us today at the Adeva conference. And I'm aware of time, and Jules is reminding me that we have a very well-calibrated session today. So without further ado, let's plunge, as we say in French, plunge into the heart of the issue. And I think we'll start at a fairly general macro strategic level here. Of course, if you flip through the pages of, the Washington Post, Wall Street Journal, Financial Times, pretty much 3 or 4 days a week now, ESG is on the front page. So clearly, in the past few weeks and months, ESG has become very fashionable. It has moved center stage, but often it's a paradox. Often it's still lacking in terms of precise, standardized metrics. And so the question I'm going to ask you guys rhetorically is, can FinTech solve the problem? So can FinTech today or tomorrow become that silver bullet that would allow us to yield more precise, deeper, and more harmonized, standardized metrics across the board? So I think that's the question I would like to discuss with you today, and perhaps we could start with Jan Christopher or Guan Seng.
Perhaps I'll chip in. The ESG theme is emerging today, and together with the far-reaching effects of the COVID-19 pandemic, as well as the issues of social inequality, there's been greater interest in both ESG investing and sustainable finance from the environmental point of view, as well as the social aspect of it. So with this, and to relate to the theme of ESG and FinTech, basically the E and S aspects tend to be based on non-financial data, generally alternative data. And there seems to be a lot of effort in the climate tech and ESG tech area with regards to FinTech, FinTech investing as well. So hopefully we can help to address during our panel discussion with regards to such development. And we probably may need the 4 Ds to make the sustainable finance and ESG investing progress going forward. The first D could be in terms of your data, making sure the quality is good and relevant. The second D is with regards to the design as well as the definition. Hence, there's a lot of taxonomy involved in terms of focusing on the E and S and G. The third D with regards to the disclosure aspect in terms of making the transparency more evidence-based so that there is less likelihood for ESG or greenwashing. And the fourth D refer to the decarbonization strategies, whether man-made or natural, so that it could help to propagate in the attainment of the ESG objectives. So with that, I hopefully has started the ball rolling. So perhaps we can go on to Jan with his inputs with regards to the second theme, which is how FinTech companies can play a role in terms of the ESG finance or sustainable finance going forward.
Sure. Thanks, Guan. I think, firstly, what's very interesting about the Times is we're hearing a lot of ESG right now. And so there's certainly a movement there. I would say that, over 50% of global asset holders are gauging or applying ESG in their factors in their investments right now. So, there's been a surge, $50 billion of dollars into sustainable funds. So we're also seeing it from the client side, also demanding more. Previously, we used to see separation between ESG funds and traditional funds, and they're starting to merge together into one area. So the demand coming from the clients themselves, which is a great sign. And then with that, how are we going to solve for some of those challenges? There's still a big challenge around the data itself and the measurement and the transparency, which you had mentioned in the story, while improving, and it has to do with the better aggregation and understanding of the data, and you've kind of spoke to that. It is a complex challenge. For instance, we worked with a big pension company up here in the north, and found that they had many issues to assess the different factors of ESG. And even if you were to break apart the E factor, that could be water risk. And in terms of if you're an international investment with an international portfolio to manage, you have many different companies to track, and their use of water, whether it be protecting from flooding or environmental impacts. And that is a lot of different sources of data inputs to then assess and come up with models to derive and your proper portfolio, the best recommended portfolio given the situation. Now, there are many other fintechs, and we could break apart each one, but we've certainly seen from our own portfolio investments, the E from an environmental standpoint, the S, and the G. Generically speaking, before I can give examples of a couple in each, but we do find that, when it comes to fintech or even startups, more often than not, we feel that in many cases, these startups are ESG focused. They just happened, they may not be fully at first labeled that way, as they may not have positioned themselves, or they have not had time to properly flesh out their triple bottom line, as they're focused on building their business in a sustainable fashion themselves. But their impact that they do have in that space can be quite prominent. And I would argue that half of our portfolio of 35 companies is ESG. The side that sometimes is a little more challenging, though, it might have a lesser number of fintechs and seems to be a bigger focus these days, would be in this story the E, and therefore the environment side of it. Although, again, we have a couple examples of that and happy to share.
Yeah. Thanks, Ian. Perhaps Svetla can chip in, because Svetla does a lot of work with the clients, especially in this ESG area. And after that, maybe Nick can round up in terms of the first theme that we are discussing in terms of the triangulation of ESG, sustainable investing, as well as fintech.
Sure. So the main challenge here is that there are no universally mandated standards around collecting ESG data or reporting on it. There are standards that exist, but they're voluntary. So, for example, there's frameworks like the SASB framework, which is a materiality framework, and it's a reporting methodology really that collects, data that is voluntarily reported by close to 900 companies that are using this framework to report. But then there is the issue of, do we trust that what they're reporting is true? So then there's a lot of companies that are doing the, public service, if you will, of collecting data outside of reported data. So data that comes from news articles or that comes from social media, like it could come from tweets or it could come from, any type of consumer reports that allows for us to kind of verify whether the reported data is correct. And so I think that, if we talk about can fintech solve the problem of figuring out which portfolio is an ESG portfolio versus which one is not, as Jan was saying, most portfolios now integrate some level of ESG data in order to, even layer an additional lens of risk, mitigation on top of everything that they're doing already. But fintechs are, busy trying to figure out where to collect the data from and how to process it. So in many cases, they use methodologies like artificial intelligence or natural language processing in order to be able to provide that additional layer of transparency. And to kind of tie this back to what we do at AWS and, why do we have a stake at this and why are we even interested in ESG, because a lot of people don't really see the connection. So we launched Data Exchange back in November 2019. And in this data exchange, we, recently, as recent as last year, we added a portfolio of ESG data that's coming from third-party providers. So we have all the frameworks that you can think of. So you can report using data in the cloud, using whichever framework is the most appropriate for your portfolio. And then you can also layer that framework with other data coming from these types of third-party providers that I was talking about earlier, which collect additional data. And so this way you can have a very complete picture of the portfolio you're looking to assess. And you can even have almost real-time monitoring of risks associated with ESG. And so to answer the question, yes, fintechs are looking to solve this problem, and we are working with most of the prevalent ones in this space.
Yeah, and speaking of tech and fintech, I do apologize because my connection was cut off for 2 minutes, which shows you that in this day and age you need to have fintech and tech backups. But just to wrap up the conversation, I think we need to have the capacity to harvest more systematically standardized ESG data, which can then be compared across sectors and geographies in order to make smart investment and policy decisions. And of course, a lot of the ESG investment world has been in part based on guesswork. The quality of the guesswork varies. Sometimes it's good guesswork, sometimes it's less good guesswork. But clearly, we haven't had, totally harmonized, standardized, in-depth data that can be, compared across sectors, industries, geographies. But things are moving, and I would say that things are moving to a large extent thanks to fintech. So really, it's but not only thanks to fintech. And we can see what happened, with the unfolding DWS saga in Frankfurt and on Wall Street in the past 5 weeks. I think it's a $1 trillion SEC greenwashing probe. So it tells you that the age of ESG by guesswork is really over. But it's not only because tech and fintech are really, as we shall see later today in that roundtable, are really allowing investors and policymakers to make, no pun intended, qualitative and quantitative leapfrog. But also it's because of two things, in my personal opinion. And by the way, I forgot to say at the beginning, so everything I say today is a reflection of my personal opinions and biases. So in my personal opinion, there's two drivers that are really being enhanced and magnified and empowered by fintech. One of them is very simple, is that the SEC 3 months ago has a new chairman, Gary Gensler. I think he took office at the end of April, so that would be like 4 or 5 months ago. And he's very much interested in fintech and harnessing the power of fintech to serve the ESG purpose in the realm of investment. So that's a big difference. And something else happened, which I think is also linked to what happens in Washington, D.C., because really, and I'm European and I'm proud to be European, but at the same time, I think in the world of finance, if things aren't aligned in Washington, D.C. and Wall Street, whatever you do in Montreal, Paris, Toronto, Brussels is beautiful, but I think it's not enough. And I think something else happened is like the largest pension funds in the world are actually U.S. public pension funds. So they are by far the largest investor category in the world. And until 5 or 6 months ago, these big public pension funds at federal, state, and municipal level were really hindered by the fact that, for example, the Secretary of Labor of the Trump administration was extremely hostile to ESG. And so basically, trust law and trusteeship and the fact that, pension board members have to flex their muscles. So basically, it's a chain of governance, right? And so before the CIO, before the chief investment officer of a large pension fund makes any decision, there are decisions being made before that by the board of that pension fund. So really, this is really where ESG starts, with pension fund trustees, board members. And until recently, they were hindered by the federal government in the US. And now everything changed with a progressive, more centrist, more ESG-friendly administration. So it's really great because there was a pent-up demand from the part of many pension investors for more ESG, more transparency, using fintech, regtech, etc. And I think now we're seeing that perfect, alignment of technology policy and regulation for the first time happening simultaneously in New York and Washington. And it's great because really, I think in the coming weeks, we should have some very positive news on that front. And so I think that there was another issue I think that we wanted to discuss today, which is, I guess, to focus a little more on climate change measurement and mitigation and, the whole clean tech remit. And for that, I'm returning to the Belle Province and tell us, Jan Christopher, what are the kind of company that you're helping, grow in that segment?
Yeah, I think that overview is a bit of an echo. Maybe viewed at the same time. Well, I will say there has been a big shift, and thank you for pointing out the different factors that go into it. I certainly do believe demand has driven it as well. You had pointed out the big pensions. There are actually some really big ones in Canada, probably a couple at least in the top 12 in the world in terms of assets, for which there is a couple of reasons why they may look to do this. One is that they actually do believe that it has a better long-term impact on ROI, and others may do it because it's good marketing and on point with their brand in many ways. Either way, that is also driving it. And on the other side, from the rationale for brand is that the trustees, those who are requesting this, those for which will profit from their pension are asking for it. They're demanding increasingly more of this. So what is very positive in all this is very demand-driven side of things. Now, the E in it has been somewhat later to be looked at. As mentioned, in the fintech world, there's a lot more in the S and Gs. I'm happy to explain. We've invested in a couple, so I'll give you some examples. On the environment side, one of the biggest areas would have to be around, I'd say, farming and sustainable farming. So we looked at a company that would support farmers and what were the issues surrounding that. Some of the biggest issues for farmers, 1 in 14 people around the world are farmers, but challenges for them to get adequate financing was the inability for them to get loans because they weren't properly able to underwrite them. But you can use different forms of data, alternative data sets, including aerial and satellite imagery to better process information about a given farm and a given location to better illustrate the chances of making a return, or better illustrating that perhaps that farm does better in that area relative to others, or has a historically strong track record, relatively speaking. Even better yet is for the banks in this world, what we're seeing more in the financial services side, to be value add, to provide this information back to, yes, protect their investment, but instead of just offering a better commoditized product, is to give value added services that also then further embed themselves in a relationship, but protect also their investment while they go. So I think that's a very interesting and powerful story of how it uses, and that's more of a really focused case in the story. On the other side, we have looked at companies like FundSeeder. And this is for more, tracking and trying to identify the best trading strategies. And so we've seen it. FundSeeder is backed by the research of Jack Schwager, where he had roughly came up with the theory, and then they proved out the concept. I think they're up to 17,000 traders on their platform. So these traders attach their information, connect into it on their trades, because they're competitive and they want to show that they are the best trader, or to better improve their trades thereafter. In doing so, you can start to identify the best traders. You can also identify the best strategies. And for those that have made a conscious effort to focus on ESG, you can have better identify those particular strategies, better prove out the returns, which is still a bit of a challenge and needs to be overlooked. Is still overlooked.
So, for example, that company you mentioned, I think it's called Agrio, right?
The first one is Agro with respect to financing of loans. The second is FundSeeder.
Typically, Agrio, for example, are you selling these data mostly to banks and insurance companies in North America? Is it global? How does it work?
It's currently mostly on the Americas side. They're originally actually from Brazil. And so a lot of the interest was more locally in Brazil, as there's substantially a large number of farms. but also we've been assisting them enter the North American market. And it was very interesting, as 5 years ago, it wasn't quite ready, even though the technology was kind of there. There was interest to see how to improve the models, but it never really took hold. But it seems like, like anything, it's not just the tech, it's the timing with their existing systems and better figuring out how to make it all come together. And it seems to be a great aspect. They have had interest in Europe. There's certainly a lot of other companies like that. We've seen several copycats, so to speak. So I think it's, but it just shows that there's a need for it, if anything. And so we see that as very positive.
And one last question, because you titillated my appetite. So, for example, what kind of tech are you using? So is it prop tech, or do you use other people's satellites? How does it work?
It's a combination of technology. I know for sure it's at least a portion is satellite and aerial imagery that's in there. They have hundreds of different data sets and so forth, tons of data to be able to, that's right, cross correlate and understand, triangulate, and make sense of what is actually occurring there. So lots of historical data as well that you have to process on top of that.
Nice, it's really fascinating. And now jumping from Montreal to Singapore, and maybe Dr. Khoo can give us a flavor of one or two interesting companies he's seen or worked with in the recent past.
Oh, actually, what I've seen is the actual natural way to actually do decarbonization. But the challenge, of course, is the measurement, as you mentioned. So, for instance, a lot of the family businesses and assets in Southeast Asia are very tropical rainforest based, or like the forestry industry, or like agriculture, plantations, and things like that. So you see that a lot of the forestry themselves, they represent a carbon sink, a natural carbon sink. So because of their lack of maturity, the easiest way to start off in terms of promoting helping to monetize the assets to help the farmers to reduce the income inequality is to actually introduce them to a carbon exchange, so that their carbon credits can be used as carbon offsets for those companies like the oil and gas companies who are looking to go up to the first stage of decarbonization. Say like coal companies that are extracting coal from the mines, it is very difficult to capture the carbon at the mines themselves, but perhaps they could actually buy the carbon credits from the forestry companies and things like that. Number two is that we have to actually harmonize, like what you say, the data collection and the definition, so that once it's harmonized, the standards are more globally accepted and it can be comparable, whether they are alternative database or financial database. Once you have that standardization, which is promoted initially by the EU with their taxonomy, a lot of companies in Asia are actually looking at the EU taxonomy and then modifying it to localize it to the specific industry in the region, right? So you have some form of regional or global standard being developed right now. So we are waiting for America to join in. And once it's done, then you have then in terms of developing a global benchmark or beta, it would far be easier. And once you have the beta, then it will be easier to evidence cases of greenwashing or ESG washing. And then finally, measuring the carbon footprint would imply that you have to measure the scope 1, scope 2, scope 3 emission. Most firms today can disclose their scope 1 and scope 2 emission. But scope 3 is very challenging because it depends on the ecosystem. So let's say you are traveling for business. When you travel for business, the airlines you took, the carbon greenhouse gas that is emitted is not part of the emission that was caused by your company. It's part of your tertiary exposure through your ecosystem. Measuring that is very difficult, but every contribution to each company, the scope 3 emission constitutes 70% to 80%. So that is the biggest thing that is a challenge right now. And if you can measure that, you probably are halfway there to actually assessing an more accurate carbon footprint. Yeah. So there are still some challenges in that sense.
Right. That's fascinating. And I like something that you raised, that people maybe on Wall Street or even in Brussels and the City of London may not be aware of. So that, in Asia in general, and more particularly in ASEAN countries like South Korea, Singapore, and also in China, the EU taxonomy has had a profound influence on policymakers, asset owners, pension funds, and sovereign funds, which is quite counterintuitive. So really, in big chunks of Asia, they really look up to Brussels, Paris, and they import and adjust and improve very often some of these ideas locally. And now I'm moving back to New York, I guess, to Svetla. I think you wanted to speak about the S and the G in ESG, Svetla, but you have anything to add regarding climate?
Sure. Yeah, I think the question was like, what are some interesting companies that are doing things in this space? And I think I happen to work for one of the most fascinating companies in the world, so would love to tell you a little bit about what Amazon does in terms of the environmental impacts, as well as AWS, which is I think the even more interesting part. So there is, in terms of Amazon, back in 2019, we co-founded the Climate Pledge, which is basically a pledge where corporates are pledging to be net zero carbon, to have net zero carbon emissions by 2040. And so there's a growing, while this is voluntary and there is no real mechanism to enforce that, companies are doing this. I think the growing number of signatories to this pledge is really promising. And then wanted to just chat with you a little bit about AWS as well, because when you think about data companies or companies that are focused on technology, you don't necessarily tend to think about the environmental impact. You think that there's more issues around the S and the G, which there totally are in terms of treatment of data and security and prevention from hacking and how data is used and things like that. But from an environmental perspective, AWS is quite fascinating as well. So there was research that was done last year, actually, which looked to see what is the difference in terms of carbon footprint of companies that are built on-prem, technology companies, versus companies that utilize the cloud. And they found that the cloud is actually 88% more efficient in terms of performing tasks such as compute, because that's kind of where the footprint comes from. Really, it's compute and storage. And so if you have a SaaS offering that's built on the cloud, you're already 88% more environmentally friendly than your peers who are not using cloud technology. This applies specifically to AWS data centers because we have also pledged that our data centers are going to be using 100% renewable energy by 2025. And as far as I know, we're well on our way to achieve that. So this is pretty unusual or unexpected, if you will. So want to just share with you some of these anecdotes. But happy to move on to the S and the G aspects as well.
Yeah, if you had to give us the one main telling story or example of a client of yours with whom you work, focusing more on the S and or the G, what would it be?
Right. So, I mean, in terms of how customers are looking to weigh the data and what they're putting more emphasis on, this is completely up to them. Really, we don't necessarily tell them, what they should be doing. All we can do is share with them the tools and the methodologies that they could use, and then they have the flexibility of weighing data in whichever way makes sense for their customers, who are the ultimate influencers here in terms of where money is spent. But something that I have seen increasing attention on is not necessarily looking so much into assessing an investment portfolio, which, as we said, there have been massive inflows of funds being put toward ESG portfolios. But now companies such as credit card companies even are looking to provide more visibility to their customers to see how their purchases are impacting the environment or social or governance issues. And I think that's a really fascinating problem because it requires such granularity of data. Even if you go on Amazon.com, you will notice that there are some products that are climate pledge friendly, meaning the companies that are producing those products are signatories of the climate pledge, and they are doing things, in order to, meet their obligations or their promises. But I think being able to in a very granular way, see what is the impact of purchasing, I don't know, a new bag on Amazon.com or whatever you're looking to shop for. I think this is like a very intense compute and data problem. I'm not saying it's not solvable. I just think that we will see a lot of evolution in this space, with data becoming more and more granular, and us being able to really connect everything that we do to our ESG impact.
Great. And of course, I use that sort of Trotskyite 1930s metaphor of the bloody crossroads, where economic, financial, and legal things intersect. And of course, you guys work with the biggest credit card companies in the world, and the wealth of largely untapped, not only financial data, but also sort of sociological, cultural, lifestyle data that is there every day, every week, every month, is huge. And I guess one of the main trends we'll be seeing in the coming weeks and months in terms of fintech investment will be, I'm talking billions of dollars moving in that direction, in the amazing ways, largely untapped, that companies can use to mine these datas and exploit them. So I think that's going to be really one of the biggest, I think, pillars or sources of activity in the fintech space in the coming weeks. And fintech, of course, includes insurtech and regtech. So we're using, that expansive definition. And maybe Jan-Christophe has something to add on that front.
Yeah, maybe I'll piggyback on the idea of behavioral data and its importance here. I'll also touch on, we may have overlooked and don't think about, but credit scores and the way that we do credit scoring and the way that we don't do credit scoring. And so if you are fortunate to have a credit score, you are in the system and you can get access to credit. And it's a very powerful tool to be able to advance and play the game and have an economic prosperity. If you don't, it can be very challenging. And so we've invested in a couple companies, one of which, for instance, came out of the US, and it was from individuals who actually did not have credit. And while they were on scholarships for university, they couldn't even get into proper housing, because they didn't have a credit score. They were too young at the time as well. So they reverse engineered the FICO score and started to build an app for which you can improve your credit score through time, giving you tips and tricks to accelerate that. And so that you can then be referred and then improve your credit score in a very quick fashion. And so this was very interesting for financial institutions who can start saying, hey, we never have to say no to someone. We could say, hey, let's get you somewhere to start, and let's help you build, and let's get you into the system more quickly. In developing worlds as well, we notice that there are just too many people who just aren't able to access the systems from traditional means. And so there must be other ways to write them. If you think of the 4 C's of credit, one of the C's is character. And so how do you define a character? Well, there's a gamified approach. How you play games can tell a lot about your appetite for risk and your personality within. And therefore, they've actually built a system to properly underwrite many of those in developing countries, to support them and assessing their credit, and then distribute these loans in the story. So, this is a form of alternative data to make it happen. If we look at governance side of things, this is a huge area. We looked at areas like digital identity, and in many countries with their own areas to move forward, but we're still short here. Having an ID is digital ID. Is incredibly important just in exercising your right to vote, which us fellow Canadians are actually doing today at the polls, or may have preemptively already done it, but or access into the rest of the system as well, right? And so how do you find a system that protects it? And we've invested in companies like Mat.ai to enable this and the transfer it in a secure fashion, so that really a wallet of your own identities, and so you don't have to pass all the information on. You can only pass a proportion of it. So lots of exciting stuff on the horizon right now, and certainly I don't think there's any end in sight for many more interesting fintechs.
Oh yeah, I totally agree. I think it's clearly one of the hottest and most rapidly growing sectors of the economy. for the next 5 or 6 years. And one more thing we don't have the time to talk to today, maybe another roundtable in December or January with our friends from Adeva, but really the whole crowdsourcing business, and also the whole credit rating agency business, which is being revolutionized by fintech, and even the giants like S&P and Moody's and Fitch are kind of changing. So all that, I think, deserves a full hour of its own, later in the year or in January of next year. But I'm aware of time, and Juliana reminds me that we only have 6 minutes left. So let's make the most of it, which is basically trying to imagine the future, all of us here. So throwing a few ideas about how we see the future in our crystal ball in the coming quarters. And I will start by saying that there's a very interesting phenomenon which is barely starting, and I think it started in New York City. And I think the Nasdaq precisely 2 months ago to the day, I think it was June 30 of this year, but whatever, they announced that they were the first amongst their peers to announce that they were launching a platform using some kind of improved or enhanced measurement technique based on the UN SDGs, the 17 Sustainable Development Goals, which is one way of seeing the world, which is quite a good way. And they announced 2 months ago that they were doing this. I think they call it the Nasdaq ESG Data Hub, and they were doing it with 7 partners. So they cherry-picked literally 7 partners, and so they sliced and diced further the world of ESG, not into the UN's 17 Sustainable Development Goals per se, but they sliced this interestingly into 7 sectors or 7 angles. And I'm reading the angles from the NASDAQ website. So one of them is gender equality. The other one is biodiversity. The other one is reputational risk. The 4th one is climate risk. The 5th one is carbon emission. The 6th one is net impact, net zero. And the 7th one is renewable tech. And so they have cherry-picked 7 companies to join their platform. And 6 out of 7 are actually fintechs. Some are small fintechs, some are mid-size, some are very big fintechs. But I think that's fascinating because I think only 1 out of 7 is an established German or Swiss insurance company. And the 6 others are fintechs, which says a lot. And of course, what you can expect in the coming days, literally, is to have the Nasdaq's competitors in Shanghai, Tokyo, Melbourne, and Paris do the same. So probably what you'll be seeing in the coming weeks is a series of such competing platforms. I think every big stock exchange and their sister, they will select 6 or 7 partners. So we may have like a worldwide, competition. It's really interesting, I think, as a development. That was sort of my strategic commentary. But let's go now to New York. What are you seeing, Svetla?
So thank you for bringing up this example. It's actually really interesting because we do work with the majority of exchanges around the globe, and we're seeing increasingly exchanges even from small countries in Europe or in Asia coming up to us and saying, hey, how can we source similar data? We want to make sure that our issuers are able to, report according to frameworks that are accepted by investors, because currently they're being basically excluded from portfolios that need to meet certain ESG requirements because of the mandates of their, holders. And so it's a really interesting problem because if you think about the big data providers, like the big names that everyone is familiar with, whether it's like the credit rating agencies or the Bloombergs of the world, they do provide tons of metrics around ESG data, but they're not necessarily looking into smaller companies. They're not necessarily looking into private companies. And I think we will be seeing more and more efforts going toward trying to figure out how do you assess a company that doesn't necessarily have the marketing dollars to have their own ESG reporting. Are they going to be excluded from investment, or is this really the biggest opportunity to figure out how to assess them and how to invest in them because maybe others are not looking there? And so absolutely, we do actually work with a lot of exchanges who are looking to, in a similar manner solve this challenge. And so my personal prediction is that we will be seeing more and more of this. I totally agree with you.
Great. And back to the ASEAN remit. GS, what do you see in your side of the world?
Guan, you're muted.
Oh, sorry. I think we are very good in measuring the changes, the carbon footprint, and things like that. But we are still poor in changing the behavior when it comes to climate risk management. So I foresee that going forward, a new kind of environmental or climate-based information ratio being generated, in the sense that the returns are still there on the numerator, but perhaps the denominator could be a reflection of your wastefulness, the company's wastefulness. So if they do something in terms of their waste management, obviously the denominator will reduce, and that would enhance their ESG value. So going forward, in terms of performance, I hope to see new metrics similar to what we have today in terms of the information ratio, where the wastefulness of the company can be measured, and then that forces a behavioral change, leading to a more circular business model. So that will tie in very nicely in terms of how they manage climate risk or environmental risk and things like that.
Great. And let's leave the last word for the Belle Province. So, Jan Christopher, what are you picking up in terms of strategic signal about the future in Montreal or Toronto?
An increasing need to seek out, understand the best fintechs that are out there. So to better solve this problem. So firstly, I'd say it's understanding which ones are. I think there's a lack of awareness around some of them. As mentioned earlier in the show, that a fintech to report on its triple bottom line can be very challenging, as they're just trying to be sustainable on themselves, but they actually do have a huge impact. And to your points where you saw 6 out of 7, I think that trend's not going anywhere anytime soon. So there's a lot of areas that need to be uncovered, and doing so with many different areas of data, it requires a lot of different use cases and a lot of different platforms and companies to solve for it. Now, through time, will we start to see, I did like how you painted a picture of everyone having different platforms and different fintechs, and I almost think that's better versus a consolidated one view in this world. But I'm certain, as anything does, increasingly partnerships are accelerating, and we're starting to see potentially more consolidation. And so there's going to be an even flow of new businesses that get created and those that get consolidated through time. And that's part of the fun of where we invest in, in our name at Holt Exchange, is really to help facilitate that.
And it's great. It was a pleasure to have you today. And I think if one message I think we really wanted to convey today is that really the phenomenal growth of the sector, because really, once again, it's positioned at the intersection where many hot things are happening, and they're like mutually accelerating, to use the Jan's metaphor. It's a multi-level acceleration of finance, economics, corporate strategy, law and regulation, and really fintech and ESG. It's really a match made in heaven. And I want to thank you once again, Jan Christopher in Montreal, Guan Seng in Singapore, Svetla in New York City, and Jules in the studio behind us, and me from Paris. It was a pleasure to be with you today, and hopefully we can have a follow-up roundtable with our friend from Adeva in the next few months. And without further ado, and I want to thank you all for having joined us today, and I'll leave back the floor to Jules. Jules, the floor is yours.